Hello everybody and welcome to Money Matters. If you like to make money, learn about crypto and other investment topics, please subscribe to the channel. If you enjoy the content, then hit that like button as well. Let's get into it. As a disclaimer, this is not financial advice. It's for your entertainment purposes only. I am not a financial advisor. Crypto market, let's just take a quick look. We've got a lot of stuff to go over today. The market is mostly red. That's after we came off a green day yesterday, but that's to be expected. Nothing goes up forever, right? We're still looking at some activity at the bottom mid-range for Bitcoin. We need to see it close above 36 and get above 40 before we go into any sort of bullish activity. So for the time being, we'll just sit tight and wait for things to happen. In the meantime, I thought it'd be a great idea if we took some topics and took a deeper dive into them to get some information that perhaps would be beneficial for everybody in their investment process going forward, and maybe even learn something along the way. So today we are going to talk about stablecoins and what they are, what they do, and which ones may be right for you. And that rhymed. Anyway, stablecoins are digital currencies that are usually, and I say usually, pegged to the cost of a fiat, the US dollar, a euro. There's some that are tied to the pound, or other assets like gold, and even other cryptocurrencies as well. And typically the ratio is 1-to-1. So if it's a fiat currency and say, for example, it's USDC, it's tied to the US dollar, so each USDC is worth $1, just like a dollar's worth a dollar. Price can fluctuate up and down. It's possible, but it's so minuscule most of the time that it does not affect anything in the process. There have been some digital stablecoins in the past that have had wide fluctuations, I think even up to 35 cents, like $1.35 or something like that. But those are relatively spontaneous, and they resolve themselves very, very quickly. So stablecoins are divided into several categories, 3 to be exact. We have fiat collateralized stablecoins, which would be tied to the US dollar, the British pound, or the euro, or yen, or whatever. We have crypto collateralized stablecoins, and the most popular being DAI. And that means that it is backed up by other cryptocurrencies like Bitcoin, Ethereum, etc. So it's really backed up by the crypto ecosystem. So it's very large and very diverse, which we'll get into that a little bit later too, because there are some benefits to that. And then there's non-collateralized stablecoins, which I would not recommend at all. They have some interesting technological solutions for backing their coins. However, I don't think that at this particular point in time within the cryptocurrency ecosystem development that they will be adopted widely, number one, because there's no settling factor in understanding that there's something actually backing it up. And two, most people don't quite understand the background technology that goes into calculating a lot of the processes that go through backing up actual cryptocurrencies. So we will avoid those particular coins for right now. There's only a few, and it is very interesting. I've read quite a bit about them, but I don't think that certainly not for myself and not financial advice, but I would never recommend that to anybody right now. There's way better alternatives available, and we'll see that as we go forward. So let's look at some use cases for stablecoins. What can you use them for? Why are they even around? Well, they're a safe haven asset. The price is very stable. So if you are waiting for a bull run, you sold all your Bitcoin and you made a big profit, and you're waiting for the price to drop and jump back in, instead of holding or taking your money off the exchange and putting it into a bank, you can convert it into a stable coin like DAI and hold it on the exchange and buy any type of cryptocurrency that you like whenever you want right from the exchange. So it's a safe place to put your money, and it's safe in the sense that the value does not go up or down. It stays the same. So it's predictable. So it's kind of like putting it in the bank and it doesn't move. It just stays right there. Another use case is for payments. lower transaction fees is the biggest deal, and we'll talk a little bit more about that as we go along too. But the blockchain has allowed for immutable transactions, ledgers that cannot be changed. So you can use stablecoins, which are a type of payment, as a form of payment, especially when there's things like cross-chain applications where one thing may or may not work with another. You can use a stablecoin in that particular case. In addition, there's a lot of other companies that are using stablecoins for specific, very, very specific financial use cases within their projects. We'll talk some about that as well. Remittance, this is probably one of the biggest ones. I was reading that cross-border transactions for currency, I'm going to use the United States, for example, United States to Mexico. There are quite a few people in the United States that are working that send money back to Mexico. It's about $35 billion a year. In fact, it's the #1 border transaction area in the world for transactions. That's $35 billion. That's a lot of money. And typically, these customers will use facilities like Western Union, or I think there's a bunch of different ones, but they're very expensive. My understanding is the average is about 7% transaction costs, and they go way, way, way higher than that depending upon where you go. And I think that there's additional costs once the money is remitted to Mexico, so you pay on both ends. Anyway, if you use stablecoins through blockchain, there is no time frame. It doesn't take 5, 7, 3 days. It's instantaneous, and it can cost less than pennies. So huge opportunities with that. Settlements, there's no central bank. There's no governing king of the bank, whatever. So there's no limitations on hours or activity. So unlike the New York Stock Exchange, which closes on the weekends, cryptocurrency exchanges are open 24/7, 365 days a year. Same thing with transactions. Stable coins, making settlements for businesses, for countries, for remittance, whatever, it can happen 24 hours a day, anytime. And of course, that's a huge benefit. There are some more benefits as well. Trading. This provides a very secure and stable on-ramp for the diversity that makes up the ecosystem for cryptocurrency. So you can trade, you can buy, sell, trade using stable coins on any exchange, whereas most exchanges have limitations on the different cryptocurrencies that they handle. So it's a very good way to move your money around within the environment. We touched upon this a little bit earlier, and stablecoins power a lot of decentralized applications. So if somebody was to say, oh, I want to start a company, or I want to start a business that is going to allow people in Ecuador to do cross-border exchanges and charge them 1 penny per transaction, I would build that application, and then I would use a stable coin to do the transactions between the different banks. There's different stages within the process, but you would use stable coins in lieu of cash to move money around. A perfect example. And this goes way beyond that as well, as you can see in our next example, which is escrow. I find this to be fascinating. Think about it. If you go on Facebook Marketplace or Craigslist or something like that, and you're buying something, especially, or PayPal, whatever, but if you're shipping something to somebody else, or you're buying something and they want you to pay for it before they ship it, how do you know you're ever going to get it? You don't. How do you know that when you die, the people that you want to leave all your stuff to get it? Well, you want to use a smart contract. You want to use an escrow service. Well, you can do all of that automatically on the blockchain. Nobody's touching it ever. You put it together, you have somebody put it together for you, and boom, it's done. That's all you got to do. And the facility that most of these escrow companies use is stablecoins. Why? Because they're universal. They hold their value. They're not fluctuating up and down in price, and they're readily available. Lending. Now, this is a big one too, especially with the new DeFi push. We've got Ava, Celsius. We've got a whole bunch of different companies that are providing lending and borrowing platforms, and stablecoins plays an integral part of that as well. So They are very important in the transactions and within the ability to move money back and forth between applications. Alternate banking, and this is a big one for, Cardano is really kind of paving the way for this one in a big way within Africa. And I was doing a lot of reading about this as well. The whole identity platform that they're putting together for people to give them status and allow them to do banking from wherever they are in the world is predicated on the ability to use stablecoins. They have to be able to have this currency to be able to do their end-to-end transactions. So it's extremely important to help build out that particular component of the futuristic financial world that we're going to be looking at. And that holds true in South America as well. 54% of the population in South America does not have a bank account or readily has access to a bank. So that's a wave of the future as well. Let's take a look at some individual coins and we're going to ascertain whether they're any good, high level, and then some of the points or factors that bring us to that determination. And when I say us, I mean me, because I was the one who put the thumbs up or thumbs down. But anyway, USD coin, which is growing in popularity, is backed or was created by Coinbase, which most of you have probably heard of, along with their IPO and their sticky little fingers in just about everything. This is a perfect ancillary product for them. The great thing about it is that USDC is backed by $1. Each one is backed by $1, and it is held in an actual bank account. So if you have 5 USDC, you actually have $5 someplace in Coinbase backing that up. So it's a test that I kind of like to look at to see if something is really is going to be something powerful. So in other words, this is a rock solid win for me, and this would be a choice for me with respect to stablecoins. This would probably be my number 1 or number 2 choice. It runs on the Ethereum blockchain, rock solid, tight, works perfectly. PAXOS is another one. This is another ERC20 token blockchain. It has the same backing as the Coinbase product. It does have a 1-to-1 dollar to PAXO ratio, and it is held within a secure financial institution, which is FDIC insured. And the interesting part about this one is that New York is a very persnickety state when it comes to financial workings or doings within the state. So they are actually working very closely with the New York Department of Financial Services and are actually approved, which is a big thumbs up. I think that any of the bands that I've seen come out and either initiate in New York or are certainly on the list. So for them to have that feather in their cap is truly a good thing, and I would put them right at the top of my list as well. DAI. Now this one is a very interesting one. It's been around for a long time. It's unique in the sense that it is not tied to $1, a euro, a pound, a yen, a won, or anything like that. It is tied to other cryptocurrencies, which is fascinating. It is truly decentralized. This is the biggest, most important, most compelling argument for DAI to be made. It's decentralized. There's no central entity. There's no central control unit. It is decentralized. They use other cryptocurrencies. In fact, there's some applications where you can actually choose which underlying cryptocurrencies your DAI is backed by. So you could pick Bitcoin, or you could pick Ethereum or XRP or whatever you wanted as your underlying store of value. Now, the way they disseminate their risk, I suppose, is that it is through the entire ecosystem. So unless the entire cryptocurrency market crashed to zero, you would have a pretty high faith rate that your DAI is backed up in a form that you could actually recoup the money that you have invested. So big thumbs up for DAI. I put them second on my list. And I put them first on the list for the future because in the future they will be, or a platform like that will be, the #1 platform for stablecoins within the cryptocurrency ecosystem. Why? Decentralization and the fact that it's backed by the entire crypto community, basically. Big thumbs up. Gemini. Well, Gemini is the first ever regulated stablecoin, which doesn't surprise me because the Winklevoss twins are just by the book people. I would never hesitate to use their products because I think they do their due diligence. They want no part of any shenanigans or shadiness, at least as far as I know. And it's probably from being burned by Mark Zuckerman. I'm not really sure, but anyway, they are very thorough in what they do, and they do everything by the book. So I would never have a hesitation with using Gemini. They would be tops on my list as well. It's backed by actual dollars of actual institution. So a big thumbs up for them as well. And kudos to being regulated on it. I think that regulation in this regard is good, and you'll see that as we go on to our final coin when we review it, because you don't want these companies just doing whatever they want to do with respect to your money and what the value of your money is. Binance, which I am not particularly a Binance fan, however, they do have some solid stablecoins. And there's a multitude of them, one of which I thought, well, they are in Europe as well. So they have the British pound and the euro, but they also have a US dollar backed one here in the United States. And it is also working with the financial institutions of New York. So I would say that it's a fairly safe bet. Again, they wouldn't be the #1 on my list because I just don't care for Binance and a lot of their operations, most of their operations. So that's my personal opinion, not investment advice. But around the world, they are #1. So it's good that they have some stable coins to play along with that as well. Now, the last one that I wanted to go over was Tether. And I didn't really want to, it is the #1 stable coin. It is widely adopted, widely used, and I think as such is having their day in the sun extended beyond its due date. I say that because there is a long history of things not going quite how they're supposed to be going for Tether. They're under investigation by, I think, I know the Department of Justice in the United States. I know that there's other countries that have jumped on the bandwagon as well. I know that there's quite a few complaints or different areas of complaint. The main one being that their coins are not backed one-to-one by US dollars or anything for that matter. In other words, they have very vaporish terms that they use for backing Tether coins. It could be in the derivatives market. It could be, I don't know all of the things that they're doing, but I will say that where there's smoke, there's fire. I've heard that from James over at Invest Answers many times. And to me, this is on fire. In my mind, and this is, again, not financial advice, just my opinion, Tether is in for a tumble. And when it does, it's going to affect the market harshly, very briefly, but it will give the opportunity to all the other stablecoins to step up and pick up the slack because they're doing things right. They're doing things on the up and up, and they deserve the business. So if Tether could get their act together and turn the ship around, that would be great. However, I don't believe that they will. And if it was me, I would never put a penny into Tether, ever. I would use one of the other ones that we have on our list, USDC, DAI, PAXOS, GEMINI, any of those I would prefer over Tether. So as you move through your investing path, you want to consider stable coins, what they're used for, how you can use them. If you're just going to be storing your value on the sidelines, waiting for an opportunity to buy, or if you're going to be using it for some sort of an application where you're transmitting money back and forth, they're excellent. There's something that are going to be a huge part of the future of crypto, and you want to make your choices wisely. The nice thing is it's pretty easy to go back and forth between different ones, so there's no harm in trying them out. But I would definitely stay away from Tether, and do your due diligence and do your own research, and choose one that you're comfortable with that will work for the things that you want it to work for. And last, but certainly not least, winners never quit, and quitters never win. Always give your very best effort to overcome the challenges that you face in life. I hope you had a great day. I had a great day, and I will see you tomorrow.